Hey guys, it's James, and today I wanted to take a look at DIVO and how much of DIVO you would have to own to be able to achieve $1,000 a month in dividends. And this is the first ETF we're going to look at. We're going to do this for 30 different ETFs here in the month of September 2022. This is the first video in the series, and I will put a playlist in the description if you want to check out all of these different ETFs and how much you would need to own to be able to achieve $1,000 a month in dividends. So how are we going to figure this out? Well, we're going to do this over on my compound interest calculator over here. We're going to put in DIVO. Now this might be a lot to handle if this is the first time seeing this calculator, but I can walk you through it here real quick. Once we figure out how much of each ETF we need to own, we're going to take a peek at each of their websites and how are they actually paying you this dividend yield. What are they doing? What is their strategy? First, we'll take a look at what their historical yield has been. Is it fluctuating? Is it going up? Is it going down? Is it staying steady? We'll take a look at what each and every one of these ETFs are doing here in this little series that we're putting together. And then we're going to compare each of these ETFs just to a regular S&P 500 index fund. And today's ETF we are looking at is DIVO, D-I-V-O. So first off, let's go ahead and take a peek at the calculator and see how much of DIVO we would need to own to be able to achieve $1,000 a month in dividends. The way I like to set up my calculators is all the inputs are in the yellow sections, and you play around with in the yellow section, all the boxes that are highlighted just a nice white, clear white. Those are the things that you actually change around. So if we wanted to make this VOO, we could type in VOO and some stats would update, but we're working with DIVO. So DIVO's dividend yield is somewhere between 4.7 and 5%, and I chose 4.97 as that is the 12-month trailing yield number. The expense ratio for DIVO is 0.55, and down here, not too concerned about this for this video, but this is you can just play around with the growth and contribution numbers by putting in an expected annual growth rate if you want to reinvest dividends or not. And you can see what type of portfolio you would have in about a year to 10 years and what type of income you could receive over the course of the next 10 years. And then you can ultimately compare one versus another. You can also take a snapshot of what the next 10, 20, 30, and 40 years would look like for Portfolio 1 and Portfolio 2. And you can do this for ETFs and regular stocks or securities. But the point I want to make here is down in these sections right here. This is just a quick calculation. So this is dividends per month and dividends per year. So how much of this security or ETF do you need to own? $1,000 a month. You would need $241,000 worth of DIVO to be able to achieve that $1,000 a month figure. If you wanted $100 a month or $1,200 a year, you'd need $24,000 of DIVO. And if you wanted $5,000 a month or $60,000 a year, you would need $1.2 million worth of DIVO. And these numbers are calculated off of the 4.97% yielding number. So if it was 5%, you would need around $266,000 worth of DIVO, but the 12-month trailing yield number is giving us a 4.97, so that's about $241,000 worth of DIVO to achieve that $1,000 a month. Next, we're going to take a peek at just how DIVO is achieving that 4.97 dividend yield number. So over on Amplify's website, amplifyetfs.com, and then over on their DIVO webpage, they have a few things to say about the fund, but I think this explains it very well under the objective and strategy. DIVO is an actively managed ETF of high quality, large cap companies with a history of dividend growth, along with a tactical covered call strategy on individual stocks. DIVO is strategically designed to offer high levels of total return on a risk-adjusted basis. Let's take a peek at their historical yield to see how DIVO has been performing over the past 1 to 5 years. So over on Seeking Alpha's DIVO page, I like Seeking Alpha. It gives a lot of free information. Here's their expense ratio we used in our spreadsheet. Here is the 12-month trailing yield. It looks like it ticked up on us here a little bit. But if we go over to this tab right here and we go over to the sub-tab dividend history, we can see it has been fairly consistent since 2008, but it looked like it had a fairly large dividend payout around December of 2019. Now that could have been for tax purposes, some type of long-term or short-term capital gains. They had to pay out the dividend a lot higher as the year was coming to a close for some type of tax write-off purposes. And if we scroll down the page in 2019, you can see that 86 cents payout. They have paid out their regular monthly payouts, and then they had 2 irregular dividend payouts. So if we don't take this into account as being a regular payout, they have paid pretty consistently over the past 4 years. And then last but not least, let's go ahead and compare this to an S&P 500 fund over on another website, Bar Chart. If we take a look at the 6-month history, so starting back in March of this year, the blue line is DIVO and the black line is an S&P 500 index, and these are percent changes. You can see that DIVO does outperform the S&P 500 this year, as we have been technically in a recession, meaning 2 quarters of negative GDP, and in a bear market. You can see that DIVO has outperformed an S&P 500 index. But if you take a look at a year snapshot, you can see that DIVO even more outperforms an S&P 500 index. But if you take a look at a longer snapshot, you can see if you are more of a long-term investor, 2 years, 3 years, and 5 years, you can see that buying the S&P 500 index would have gotten you much larger overall returns than DIVO. So that wraps up this video. If you guys are interested in this calculator, I offer this calculator over on my Patreon page. You get to play around with these numbers, put in different ticker symbols, and play around with the fund stat numbers and the growth and contribution, and take a peek at what type of portfolio values you could have over the course of 10 years and what type of incomes you could expect to receive. So with that is DIVO. Next up, let's take a look at JEPQ.